Hello and welcome to another Apex Signals strategy video. In this strategy video, we'll take a look at the 1-2-3 strategy. And this is based upon a couple of very basic premises. The most important thing as a trader that you need to understand is what the trend is in the market that you are participating in. This is the very first thing you need to understand in order to even attempt to make a profit. While some people will tell you that you should never go with the herd, the reality is that you need the herd to push the markets higher or lower to move your positions into profitable territory. You simply can't do it on your own. However, trends change, and that's what we need to pay attention to. The 1-2-3 strategy is simply a way to determine when a trend has changed, and this is one of the most basic strategies that you can implement. It also turns out to be one of the more reliable ones. The first thing you need is a recognizable trend line on a chart. Now, in the South African Rand, Japanese Yen, you can see that it's been a pretty reliable uptrend here. So the first thing you're thinking is, I don't want to sell. But what happens if we break down below that trend line? And that's where the 1-2-3 strategy comes in. You can see that there's another trend line here on the Canadian dollar Japanese yen pair on the weekly time frame. And once it breaks down below the bottom of a trend line, quite often you get a phenomenon of the breakdown and then a retest. So when this happens, I draw a 1 here at the lows. You see that's as low as it went as we broke down. You can draw a 2 here at the trend line to see if it's retested, and you can see that this former support now acts as resistance, very common. And you can draw a 3 as we break just below the lows, in other words, making a lower low, the very essence of a downtrend. That's a confirmation of an uptrend line break and reversal, and therefore should send this market lower. Traders who decided to sell here ended up making a significant profit as the trend changed.